We've already got mechanization at Batupele. We have mechanization at Mogalakwena, of course, the open pit, and we have mechanization at Unki. So the mechanization of mines is not new for us. And it's not, well, because we've had a strike, now we're going to run into mechanized operations. We are redesigning the Twickenham operations, which was quite a few years ago designed as a conventional mine. But remember, we've now had Batupele been running, 8 years or something, so we have the experience to mechanize these operations. The ongoing R&D at Batupele means that we're much more confident now about the next generation of lower profile equipment. And so overall, we feel actually pretty comfortable that our next generation mines can be substantially more mechanized. And remember, a number of our joint ventures, Mototolo is a mechanized operation, Kroondal is a mechanized operation. We're planning for BRPM at Styldrift for those operations to be mechanized. So it's not as if, we've all sort of woken up and said, well, there's a difficult labor environment, let's go and mechanize. As the mining of the future happens, we must make sure that these mines are developed so that they can be more sustainable and actually also more socially acceptable to society. The decision to exit Rustenburg is very similar to the decision that we made to exit Union. So we made this decision way before there were strikes. I think it's important that we go back to the decisions that we made at the beginning of 2013. We said that when we looked across our portfolio and we looked at the number of assets that we had and our ability to spend capital, we were trying to spread our capital too thin, and therefore we were actually not doing the expansion of the operations that we could, that had the best return for us. And so we made a decision early on, if we were to spend 15 billion rand of capital, we were not going to be spending that capital at Union Mine. Although we said that we can consolidate those mines, we can optimize the production, and they can be cash generative mines, and they can still be good operating units. But we were unlikely to spend the capital there. We have previously reduced the amount of capital that we spent at Rustenburg, and we sunk 3/4 of a vertical shaft at Thembelani. And we chose to shut that down because we didn't have sufficient capital to do all of our capital projects, plus do the sinking of those shafts. So this is not because there's a problematic union or we've been through a difficult period. We have got assets, and if you look at our assets of spending money at Mogalakwena, Unki, potentially Twickenham, Amandelbult, they're much better assets for us to put our capital into. Notwithstanding that, we still plan to spend between 70 and 100 billion rand of capital in the next 10 years. So this is not running away from South Africa. We still seek to invest, we seek to grow, but we would use, of course, the proceeds from these operations to enable us to grow into the other parts of our business that give us better returns than the returns that we have at the moment.